All right, folks, welcome back to the show. It's your favorite money man here, ready to break down what's shaking on Wall Street. Today, Monday, May 26th, 2025, was a real nail-biter, a roller coaster, a day that kept us all on the edge of our seats. We saw some big moves, some surprising turns, and a whole lot of head-scratching. So, grab your notebooks, get ready to take some notes because we're diving deep into the numbers, the news, and the noise that shaped today's trading session. We've got everything from the big board indices, to the shiny allure of gold, the ever-important bond yields, and even what's happening with the good old US dollar. Fasten your seatbelts, because we're about to unpack this complex beast of a market day. Booyah! Let's get to it! Well, let me tell you, it wasn't a pretty picture for the big three today, not at all. The Dow Jones Industrial Average, that granddaddy of the market, took a hit, folks. It closed down a hefty 256 points, or 0.61%, landing at 41,603.07. That's a significant slide, and it tells you investors were feeling a bit queasy. Then we look at the tech-heavy Nasdaq composite. The Nasdaq tumbled 188 points, a full 1% drop, to finish the day at 18,737.21. When you see the Nasdaq taking a dive like that, it means those high-flying tech darlings, the ones everyone's been betting on, are losing some altitude. And let's not forget the S&P 500, the broadest measure of the market. The S&P 500 ended the day down 39 points, or 0.67%, closing at 5,802.82. The overall sentiment? Caution, caution, caution. Investors are clearly worried. Now let's drill down into the sectors because that's where you really see the story unfold. The utilities sector, believe it or not, was shining bright. It gained a solid 1.18%. Now why utilities? Because when investors get nervous, they flock to safety. Utilities are seen as stable, reliable, dividend-paying stocks. They provide essential services. People pay their electricity bills even in a downturn, so they're less volatile. On the flip side, the tech giants took a beating. The Nasdaq 100, which is packed with the biggest non-financial companies on the Nasdaq, dropped 0.93%. This mirrors the broader Nasdaq Composite's weakness, and tells us that the big tech names, the Apples, the Microsofts, the Amazons of the world, were under pressure. Then there's the transportation index. The transports dropped 0.6% today. When this index goes down, it often signals that the market expects an economic slowdown. So, what's the big picture from the sector movements? It's a tale of risk-off sentiment. Alright, let's talk commodities. These raw materials are the building blocks of the global economy, and their prices can tell us a lot about supply, demand, and investor sentiment. First up, gold, the traditional safe haven asset. Interestingly, gold actually fell today. The price dropped to $3,334.60 per ounce, down 0.93%. Next, let's look at black gold, crude oil. Oil prices actually rose slightly today, climbing to $61.85 per barrel, a gain of 0.52%. This uptick could be due to a variety of factors. Maybe there are expectations of tighter global supply, or perhaps geopolitical tensions in oil-producing regions are flaring up. What about other metals? Silver, often gold's little brother, held its ground. It was steady at $33.61.5 per ounce. Copper, on the other hand, saw a bit of a rise. Dr. Copper, as it's sometimes called because of its ability to predict economic health, rose 0.31%. This is a positive sign, hinting at some strength in manufacturing demand. And what about the stuff that feeds us? Agricultural commodities like wheat, soybean, and corn remained mostly flat today. Overall, the commodity markets presented a mixed picture. Gold taking a breather, oil inching up, copper showing some life, and agricultural products holding steady. It's a reminder that you can't paint the entire market with a single brush. Section 4. Bond market. Action, yields tumble as caution prevails. Let's switch gears and talk bonds, baby. The bond market is where the smart money often signals its moves, and today, it was screaming caution. The 10-year Treasury yield, a key benchmark that influences everything from mortgage rates to corporate borrowing costs, dropped to 4.509%. Now, when bond yields fall, it means bond prices are rising. And why are bond prices rising? Because more people are buying them. This is a classic flight to safety. Investors are looking for a less risky place to park their cash than the volatile stock market, and government bonds are seen as one of the safest bets around. It wasn't just the 10-year, the 30-year Treasury yield also decreased slightly, settling at 5.031%. This long-term bond yield also reflects investor sentiment about the future. A dip here, even a slight one, reinforces the idea that folks are looking for security over high returns in the current environment. This movement in Treasury yields is a big deal, folks. Section 5, Forex frenzy. Dollar dips slightly amidst global currency shuffles. Now let's head over to the wild world of currencies, the Forex market. What's happening with the US dollar? Well, the US dollar index, DXY, which measures the greenback against a basket of other major currencies, actually dipped slightly today. It fell to 98.96, a modest decline of 0.16%. This might not seem like a huge move, but in the multi-trillion-dollar currency market, even small shifts can have big implications. A weaker dollar can make US exports cheaper and more competitive, but it can also signal changing perceptions about the US economy relative to others. Looking at some of the major currency pairs, the euro gained a bit of strength against the dollar. The EUR-USD pair rose to 1.139, up 0.21%. The British pound also saw a slight uptick, with the GBP-USD pair rising to 1.356. However, it wasn't all one-way traffic. The dollar actually showed some muscle against the Japanese yen, with the USD-JPY pair climbing to 142.83. This indicates dollar strength in some Asian trading. Other currency pairs also saw some movement. The USD CAD, or the US dollar versus the Canadian loonie, fell to 1.371, meaning the Canadian dollar gained some ground. So as you can see, it was a mixed bag for the US dollar. Section 6, Volatility Verdict. Fear gauge down, but don't get too comfy. Let's talk about fear, folks. Or rather, the market's measure of fear, the VIX, also known as the Volatility Index. And here's a bit of a head-scratcher for you today. While the major stock indices were down, the VIX actually dropped. It fell by over 8% to 20.48. Now that's a significant move for the VIX. Typically, when stocks go down, the VIX goes up because it reflects an increased demand for options that protect against further losses. So what gives? Why did the fear gauge take such a dive on a down day for stocks? Well, one interpretation is that while the market did sell off, the selling wasn't panicked or disorderly. However, don't break out the champagne just yet. While a falling VIX can be seen as a positive sign, suggesting that investors are becoming less fearful and more willing to take on risk, the overall market tone, as we've discussed, remained cautious.
Section 7, Global Tremors. Trump tweets what's really moving market. It not just about happens while street folks. U.S. market plugged into global economy. And today international whisper will definitely playing a role. One big piece of news came from the US-EU trade front. President Donald Trump extended deadline imposing hefty 50% levy on goods in the euro area. The deadline July 9th pushed back from July. This news actually gave lift European stocks Europe 600 index gaining 1%. Europe equity futures also got a boost this, with S&P 500, Nasdaq 100 contracts advancing over 1. The percentage announcement then had some chitter. Federal Reserve Minneapolis President Neil Kashkari claimed in saying approximate interested to be hold for a while. He pointed to high mortgage rates and impact of tariffs as a reason for this stance. Corporate news also made some waves internationally, which can have ripple effects. Nippon Steel shares Japan jumped over 7%, after President Trump voiced support for Fortune $0.9 billion bid for U.S. steel. Over in Australia, WishTech Global show his shares surge over 5% after $2.1 billion acquisition of U.S. cloud computing, firm called E20 Pan. But let's forget broader tariff thread Trump.
On Wall Street. So, there you have it, folks. Monday, May 26, 2025, was a day of pullbacks, caution, and a whole lot of cross-currents. The major indices, the Dow, the Nasdaq, and the S&P 500, all ended in the red, signaling that investors are feeling a bit nervous about inflation, what the Fed might do next, and the general state of the world. We saw a classic flight to safety, with money flowing into the utilities sector and into bonds, pushing Treasury yields down. Commodities gave us a mixed picture. Gold surprisingly dipped, oil edged higher, and copper showed a little bit of strength, hinting at some manufacturing demand. The US dollar was a bit wishy-washy, weakening against some currencies but holding its own against others. The key takeaway for you, the hardworking investor, is to stay informed, stay diversified, and don't make rash decisions based on one day's moves. Found it helpful? Don't forget to give it a thumbs up and subscribe to Plus USA for more insights on remote work, side hustles, and online income opportunities. Thanks for watching, and remember, your earning potential is limitless.